Welcome now, stock trades. Boy, has this been a crazy start to the week. In this video, I'm going to be essentially showing you what to expect because the roller coaster is not over. I repeat, the roller coaster is not over. So without further ado, we're going to go ahead and show you this economic calendar. Not much happening today, but we are responding, meaning bloody red markets, because of the terrible CPI data that we got back on June 10th. On May's CPI report. So we're going to go ahead and break down what to expect this week. I did it in a very respectable format for any new trader or even advance. So the biggest issue we have right now is stagflation, the S word, high inflation with slow economic growth. So that's a lot of things, this is in theory, this is very difficult to see and, we're living it. So this is definitely a, time to be in. So on Tuesday, June 14, tomorrow, the FOMC meeting meets. Now, we've seen this multiple times. I hope you're starting to see a pattern. They don't really say anything. On Wednesday, they're going to make a statement. But what I want you to pay close attention to is tomorrow we have our PPI and also NFIB. So PPI measures wholesale inflation. You see, we have the CPI, which measures essentially your inflation. Our inflation, the consumer inflation. But you have to also understand is that the producers of the product are also experiencing inflation. And usually it's important because the PPI tracks with the CPI, and the PPI is reporting tomorrow. On the tomorrow also as well, we have the small business optimism index, which shows you price increases, how small businesses are handling with this big inflation problem that we're having. And small businesses are important because they represent approximately 50% of the global GDP. Now, on Wednesday, June 15, the FOMC, they're going to have a statement after their meeting, and the market, especially today, has priced in a 75 basis point rate hike and a more hawkish presentation by the Federal Reserve. So we're going to see that on Wednesday. We'll let you know. And we'll see what happens. It's going to be a coin toss, honestly, at this point between the 75 versus 50. I mean, we could say 75% of the market most likely thinks it's 50, but it's growing more so on the 75 basis points that I personally think we need a 75. But again, that's just my opinion. We also on Wednesday have retail sales, which is important because we want to see how are retail, like Target, Walmart, essentially, a lot of these retail stores, they give this data to the government, and I want to honestly see how are the American people spending? Are they spending more? These are seasonally adjusted, meaning that they have a seasonality towards them. Q4 tends to have a high retail sales because of the holidays, Thanksgiving, Christmas. It's going to be a very dark Christmas next. Hopefully the economy gets fixed because boy, the American people have been through a lot. And the whole world has, right? Anywho, mortgage applications, they've been down, and we all know why. Interest rates are high. These are very big issues that we have with inside of the real estate market. And if you go on Zillow, we can basically see that a lot of houses are coming back onto the market. There's a lot of price cuts. And definitely if you're in the real estate business, it's great to increase your diversification, hopefully in the next 6-7 months, because, prices of homes may come down and then you can rent them out, right? So on June 16, Thursday, we have the Federal Business Survey of New York and Philly. Again, they go out to their district. They ask a bunch of business owners, how are they dealing with inflation? Now, I can expect that a lot of them are going to be complaining about the inflation, but as we're going to see right now what they say. Now, one of my favorite ones here is the industry production index. Now, what this does is it essentially gives you, for me, how I use it is it tells me when the economy is like overheated, as you can see here, and I mix it with like our recession indicator. But usually when it gets around 100, 101, we can see the economy is overheated, so it needs to correct, so recession. And same thing with the pandemic, 100, recession. But that was a pandemic-induced, self-induced if you ask me. But now we're at 105 now. This basically tells me that we're at a bubble and we're still overvalued. And we need a recession, right? Either the Federal Reserve is going to go ahead and increase interest rates, which is what they're doing, which will essentially drive this down. But if you look at all the times we had, in fact, let's just, I'll show you the recession predictor right now. Let's just go here and look at the inflation rate. Every time, and the gray here represents a recession, every time we had high bouts of a recession, high inflation with the CPI here reporting for 3.5, which is back in the 1950s here, we had a recession to bring it down. High bouts of inflation here at 6.4%, recession brought it down. High about, it's 1975, we had inflation around 11%, 11, 12%. Again, a recession brought it down. Then it increased again to 14%. And then a recession, double recession brought it down. So why is this section here? Why is this any different? A recession needs to happen to bring things down and reset the market. Now we already starting to see the crypto markets. I'm going to make a crypto video, and there's that. So now very quickly, let's look at a recession indicator. So this is the 10-2 in the federal funds rate. Now, if you look at here, the red and the blue, every time the red and the blue dip to this black baseline here, this line here that you see, the black baseline, you see a recession follows. It's a recession predictor. We see it go up, then it came down, recession. Go up and it came down, recession. Down here, recession. But for some reason, and I honestly think the Federal Reserve and the government's doing something, I just don't know. I've never, and no one has, seen the federal funds go in one direction and then the 10-year -2 go the other. Now, again, when you're investing for 10 years, you expect the 10-year to yield you more than a 2. But now the 2 is starting to be higher because the 10 minus the 2 is higher. So then the number becomes 0, AKA the economy outlook for the forecast in the future ain't looking too hot. I've never seen this. This is saying recession. This is saying no recession. But this red one is more predictive. So that's why a lot of people are saying, well, this may not be a recession. It may just be a bear market. We're going to have to see. But as you can see right now, there's a lot of data I just presented to you guys. But this is what we're going to be waiting for. The market's going to be looking at Wednesday to see how the Federal Reserve is going to act. But a lot of traders, advanced traders that make millions of dollars in the market, they take a look at these dates here, PPI, the NFIB, the retail sales, the mortgage application, not so much mortgage, but unless they want to trade mortgage stocks here. But they look at these here and essentially gives them an understanding of where the economy is headed. Now, if you like this video, please don't forget to subscribe, like, comment, and let me know what stocks would you like me to analyze. If you have any questions about the video, please comment down. I want to, again, bring back our one-on-one discussions. I miss you guys, and I'm finally excited to have this YouTube studio slowly nearing its completion. As always, it is a privilege and honor to serve you guys. God bless you, and I will see you on the next one.